A very good afternoon to you, ladies and gentlemen, and welcome back to this ballroom. You're joining us at the DSP BlackRock Presents Cafe Mutual Conclave 2015. I hope you all have had a hearty lunch and are ready for our next session. So now all investors are not alike, and in this next session titled What Investors Want, Ravi Trivedi, who was ED and leading the practice of financial services at KPMG, will talk to investors from different backgrounds and profiles to bring you some answers. Can we please have Ravi Trivedi here on stage?
We wanted to keep this session interesting after lunch because it's normally called the graveyard shift. And I think this is also an opportunity for all of you who, dare I say, live in a little bit of an ivory tower with your spreadsheets and your competitive benchmarks, etc., to actually talk to the real human beings who actually buy your products. And I hope the experiences that you hear from them on what they bought, how they bought it, what was the experience, what do they look forward to in the future, will give you some indication of where your business should be heading and what are the opportunities that you see in the future. So we have a very interesting panel, and you'll see a diversity of experience and investing backgrounds. So let me first invite Deepa Jatkar. Deepa is a very successful media person. She's been a veteran in the business, and she's currently general manager with Mediacom Communication. Deepa, please. Thank you. Thanks, Deepa. So Deepa, just very quickly, just give us a little bit of background, what the media business is keeping you busy with at the moment.
So I work with Mediacom Communications, India. I head their Bombay office. And essentially, this is a media planning and buying industry. I don't know if all of you are aware or no. You said, what is keeping us busy?
Yeah.
Yeah, I mean, I hope advertisers spend and they keep us busy.
Okay. So Deepa, just wanted to check with you. When did you start investing? I mean, I know that it's a tough question because you may have put in a fixed deposit and your parents may have invested for you, etc. When did you start investing, and what kind of financial products did you invest in?
So yes, I did typically start with the safer options, which is your FDs and etc. and PPF and so on and so forth. I started investing in mutual fund, I think about 2 years ago.
Okay.
That's the first time that I kind of,
right.
had an experience where I actually spoke to a couple of people and sort of advisors, and then, went about it and in a more systematic manner rather than just
So were you approached, or did you reach out to somebody?
So I'll be very honest, I have, been having this discussion with more at home with my husband, because he thinks like, I can't create wealth, and I go to office and, I work like whatever, 10, 12 hours, and, there's no point of doing that forever, because if you can't create wealth or, then there's no point. So I kind of decided out of many, result of those discussions that maybe I should try and see and all. So, so I won't name, but there was one particular, sort of brand which I approached, and I also met their teams, and they came and they explained the process to me and so on and so forth.
So
but I did not go with them.
Yeah, oh, that's good. So what about your bank? I mean, did your bank try and approach you and ask you to look at some investments?
Yes, a few times, and eventually I did go with, with the bank, but not because I was like terribly excited with what they had offered, but because it was easier,
right?
To take the bank route and
right.
Yeah.
And what has the experience been?
Okay, so
both positive and negative, if any.
Okay, so I think the advisors, whether it is at the bank or, if they are individual advisors or whatever, I think for people like us, they just need to simplify things, just give me the big picture and, don't show me all these, I don't know. So the people who met, they kind of showed me like a gold package and platinum package, and I don't know, I think I was just going to, So it was more like, they were trying to sell me a package and not really telling me that this is good for you and, please. So it was more like an assembly line kind of thing that, okay, I am in this kind of salary bracket and they should prepare this package for me and that kind of thing. Right. So eventually I did my own research and, so to that extent, the first experience of interacting with an advisor has been, okay, it's complicated, I might as well stay away, I'll do it on my own kind of thing.
Right.
After I started investing, yeah, see, it's been all right. I mean, and I specifically with regards to mutual fund, I'm not like a seasoned investor or whatever, but I'm aware that you can't go in like some kind of cardiac arrest if it is going down today, tomorrow, so you have to like 3 years, don't get into that panic mode and all. So I won't be able to comment if it has been good or bad as such. I'll be happy if it is good after 3 years.
And since you're in the advertising business, do you think any of the advertisements that you see from mutual funds, do you recall? Do you remember the brands? Did any of them influence you in any of the decisions?
No, I don't recall. No,
Okay.
I'm a media person. It's
That's
my
scary.
job to see ads, and so I don't recall any mutual fund as such, a brand, but I recall the financial services brand. Yeah,
Right.
yeah.
Right. Okay. So finally, what would you, as you grow in your career and, hopefully make a lot more money, etc., are you going to stick to investing through yourself, or are you going to seek an advisor to help you more professionally?
No, actually, I am seeking an advisor. So I was told that is going to be the audience.
There are enough hands going up, sorry. Okay, great. So Deepa, thank you very much.
I'm actually actively looking for an advisor.
Right.
Those who can simplify things for me, if they come with a package, I will just like, okay, fine, I'll figure it out.
Okay, so you need somebody to advise you, not to sell to you.
Yeah.
Okay, thank you very much, Deepa. Thanks for your time. Appreciate it. Okay, please, go ahead. One question.
Yeah, always. I mean, that frame, last 5 seconds of every ad, I remember that.
It's the first entry point for a mutual fund investor, that mutual fund investments are subject to market risk.
But you see, the scary thing is that she's a media professional and her job really is to monitor all the ads, and I don't think she probably can distinguish between the brands.
So I think the communication works really well to the extent of, okay, I know this brand and, this is not some fly-by-night kind of operator.
Yeah.
But beyond that, it has to be more, like I said, if you're telling me that this is what is your requirement and here is what you should be doing, that's all that we need, at least people like us.
So thank you, Deepa. Thank you very much for your time. Very nice meeting you. Take care. Okay, next I'd like to invite Suhash Uman. He's a freelance brand and media consultant and represents what I would call as a small business, medium-sized business, and as a mid-career professional. Please, Suhash, thanks. Good to see you, Suhash, please. So, Suhash, let me just start by asking you, who approached you first?
Well, I was approached first by the banks.
Okay.
They do a lot of data mining, and I think the mistake is that we leave our monies with them, so they chase us.
Right. So you were chased for a while by the bank, and
maybe for about 4 to 5 years.
And was it specific to a product, or was it saying build a relationship with us? What was the approach that they used?
Well, always they would tell us that what are the better ways of investing and stuff like that.
Okay.
People changed, and I think they kept on changing the people so that finally the third person made an impact.
Okay.
And the result was we lost a lot of money.
Okay, I'd asked them in the briefing session to be as frank as they would like to be, and you're seeing the result of that. So since you seem to have had some bad experience with investing through the bank, what did you do next? Have you sought out an individual advisor, or are you working with some professional firm?
Well, in fact, I also had a brief stint with the advisor. I must tell you something that, this is a business which involves a lot of involvement. Okay, you really can't, it is a low interest, very, very uninteresting subject for a person like me. And it requires very high involvement. You've got to understand what's happening. And the advisor really doesn't have the answer.
Right.
And the most important thing is, like Deepa said, you need to be invested in for at least 10 years to really see the whole thing performs. Because when the market performs badly, they come and tell that, listen, you need to stay invested. Liquidity is an issue. You should stay invested for about 8 to 10 years for you to see some good results.
So does the advisor that you're working with help you with diversification based on your current financial position? I'm sure being a business owner, you go through ups and downs.
Actually, I don't have that kind of liquidity because I would rather invest that money in my business vis-a-vis funds because it would appreciate much better, and it really does. But I would say SIPs that I have seen because I have a son, so SIP has been working. So SIP is one thing that's been working. I would not like to name them, but there are quite a few funds that are positive, and systematic investment works. Also, I started recently learning about value average, which is something new. It's more of academic. I don't think small monies I keep experimenting with.
So are you, within the mutual fund portfolio, are you diversified into different types of mutual funds? Are you focused on purely equity, or do you have debt? I mean, because
No debt.
Because I'm asking you the question from a perspective that you're getting to a point where you should fundamentally start looking at some retirement planning.
Yes, but let me tell you, I am more into a valuation game. Okay, and I have 2 enterprises, so I am investing in them, and I hope they are valued more than what investments are.
So going forward, what would you expect your advisor or the mutual fund industry at a whole to be able to give you as a better service or a better opportunity for the future? Because, like I said, it's one of your portfolio
Actually, I
areas.
think, much before we had this conversation, I was trying to tell you that, when times are bad, your advisor runs away.
Okay.
He should not. We are all in the service industry. There are times when your client goes through a bad phase. You need to be there. He may be shouting at you, he may be doing that. And see, even if he's frustrated, he needs to get his anger out. And he certainly knows, he's a mature person, he knows it's not that he's shouting at the advisor but he wants somebody to stand by him.
Yeah.
All right? So people should have certainly the emotional quotient to be there. And then when times become good, he stands to gain.
So the final question that I have for you is, given your perspective on the advisor staying with you, are you happy to pay for the service?
Of course, certainly yes. If I'm going to make 100 rupees, I don't mind paying 5 rupees to him or 10 rupees. It should be a simple system that the more I make, the more you make.
Okay.
You earn.
So you want it to be linked to the returns rather than just purely as a service?
Absolutely. Because I don't think that it's a very complex business. I don't think any advisor or to me, even the fund manager knows this business to the extent that he can promise me anything big. Right? It's a very complex business, So I think the best is that, I need somebody who's committed.
Yeah.
Right? 12 o'clock in the night, if my advisor is thinking of my business, then I don't mind paying a percentage of what I gain.
That's great. Good to hear. Very good to hear. Thank you, Suresh.
Yeah.
Thank you. Thanks. Great. I'd like to invite Mr. Uday Karnik. As you can see from Mr. Uday Karnik's, what I should say, dress sense, that he's retired, very senior. He was ex-vice president at NOSIL. And I would like to ask Mr. Karnik questions which are linked to what the retirement planning and the retired, lot of people in this country are trying to do. Good to see you, sir. Please.
Thank you.
So, sir, you retired, what, 3 years ago, you were saying? Oh, sorry. 7 years ago.
About 8 years ago.
Very good.
2007.
Okay, and I hope you're enjoying yourself now.
Pardon?
I hope you're enjoying yourself.
Yes, I'm enjoying a retired life. I'm president-elect of the Rotary Club of Shivaji Park.
Very
So
good,
I'm
very good, sir.
More on charitable organizations now.
Okay. So, as you were approaching retirement, did you, as a conscious decision, look at a retirement process and the financial implications and planning for that?
What I did was, because if you want to maintain the same standard of living as you were experiencing when you were in service, you have to first ascertain what are your likely income, which you must get from your retirement package. So I've kept an account of what my monthly expenses were for the last 3 to 5 years before retirement. And then when I got my package, I sat with one of my friend who was also a financial advisor, because in the year 2007, there were not many of these fund managers around. And so there was not too much of an advice from banks or institutions or mutual funds. They were still in nascent stage. So we sat down, and what I did was, whatever I needed on a day-to-day basis, monthly basis, on post-tax return, I put it in the regular return income basis, that is senior citizen savings scheme, fixed deposits. And I found out that from my package, about 70% went into this whole package, which will give me a retirement, the monthly income, which I needed to keep my standard of living. The remaining 30% I invested in mutual funds and shares.
Very good.
And what I did was, in the initial stage, as soon as I retired, with the help of my friend, we invested in about 7-8 mutual funds. And after 3 years, I took an account as to what are the mutual funds returns coming to me. I found that few of them were not giving me good returns, whereas 2 or 3 were giving me very good returns. So third year, I took a stock of the whole situation. I exited from the funds which were not giving me good returns and redeployed those funds in the mutual fund which were giving me good returns.
Right.
After 5 years, what I did was, by the time the mutual funds had settled down, because mutual funds don't give you a regular income. They give you once in 6 months, once in a year, at the end of the year. So after 5 years, I realized that yes, now the mutual fund income has settled down. So then I started exiting out of the tax, fixed deposits, high risk investment which I had made, like cooperative banks, just to get a good return. So I slowly started, after 5 years, exiting out of those fixed deposits which were not very attractive, or the cooperative banks and the cooperative societies, etc., and started redeploying those funds into the mutual funds.
So are you still with the same advisor, same person to help you with the investments, or do you have a different set of people who advise you?
No, I usually do myself.
Do you do it
on
yourself?
my own, because as I told you that after 3 years I came to know that
Right.
3 or 4 mutual funds are giving me good results,
Right.
and I have stuck to them. I
Right.
don't want to now diversify. So at this age, I don't want to do speculation or diversification. I mean, I want to leave as much less problems for my heirs as possible.
Right. So, given the fact that you do your own research and you obviously have a very good long-term horizon for investment, are you satisfied with the way you've been serviced by these funds in terms of not just the returns, but in terms of looking at where are they investing, because you're an interested investor now.
Yeah.
You have the time to kind of study this. So are you informed by the funds on what they're doing? How well are they looking at it? What is the perspective?
See, I keep getting messages from my bankers about the good funds which are likely to invest. Then the Times of India also gives a column about the funds which are giving you good returns, etc. So I keep a track of them.
Right.
But I usually decide on the investment depending on the liquid funds available with me. And as you know, the cash management fund is there. Yeah. The only good thing which the bank has done, and in my case, is that they advised me to shift over to the demat mode of the mutual fund also. Yes. So that has helped me. So what I have done is, in the last 1 year, I have liquidated all my physical mutual funds and converted them into a demat mode.
Right.
It is a question of redemption.
Right.
If you see a physical mutual fund, you have to get the form, submit it to the broker, he will go to them. It's about 7-8 days. Whereas a demat mutual fund, you just click and within 3 days you get the money.
And I've asked a question to a couple of other people. Do you see advertisements and do you get influenced? You have time to watch. I mean, that's the point I'm making. So do you ever get influenced by any of them?
Pardon?
By advertisements of investment opportunities and things like that?
No, I don't get that. I see, basically one thing I have made a principle in my life, that I will not entrust my funds with somebody.
Right.
I'll be the own manager of my own funds.
Okay.
I take advice, I listen to them. If I'm convinced, I will always invest. But I will not, there are a lot of scams which have happened. When you invest the funds, or you allow the portfolio management scheme or somebody else to manage your portfolio, and then something happens, and then suddenly if the market crashes, then you lose all your money.
Right.
It's better to keep.
Very good, sir. So thank you very much for your time.
Yeah.
Really appreciate it. Thank you. Very interesting conversation because, this is a growing segment of the population, people, white collar, senior people retiring, desperately need, and from our experience, I've seen, really need good retirement planning support. Most advisors will abandon this lot because they know that there's no steady income coming in, and therefore, there's very little likelihood of new fee coming in. Okay, I would like to invite Mr. Ganesh Lakhia. He is the co-owner of chemicals pharmaceuticals business. Mr. Lakhia, please. And this is again a very interesting perspective. Please. Thank you, Ganesh. Thanks. So Ganesh, we had a conversation the other day on the phone, and you said that you are not a big believer in mutual funds and that you make your investment decisions directly into the stock market. Right. Give me a rationale for your decision.
See, I'm coming from a community of, we are a borrowing community for manufacturing. Right. So it's not, see, mutual fund is a money that we like having a fixed deposit and he was expecting a better returns to go for. So when I borrow for my own business, if I have to diversify or invest somewhere else, naturally I have to make